Welcome to Salty Investors, episode number 30, some kind of milestone. It is Friday, what is it, May the 5th? 5th of May. Now, Tim, as we usually do, let's start off with the salt. What do you got for us this week?
Well, the RBA lifted a whole 25 basis points, and I saw this guy called Mark Burgess. I don't know if you remember him. He's Wizard Home Loans. You remember in the 90s, you getting spammed on
Boris.
your TV? Yeah, Boris, is it?
Yeah.
Yeah, Mark Boris, a great guy. Is 30 years of, lower and lower interest rates, and he's made a freaking killing.
Yeah, he did.
I looked him up, and in the early 2000s, he sold it to Wizard Home Loans to GE Money for $500 million, and that was back in the day when $500 million actually meant something.
Yep.
But now he's like, complaining a whole heap, having a bit of a whinge that interest rates have gone up, and now he wants to somehow reverse this decision. So it sounds a little bit of a whinge to me, and I think he's doing it right himself. I don't know, 30 years of a great run where you've had the easiest job in the industry. Maybe you should keep your mouth shut. But what do you thought?
Oh, yeah, look where it is. We're at 3.85%. Jesus Christ. When we get into, having a look at that interest rate rise in a couple of minutes, we've got a chart up there from 1990. If you see where the interest rate is, like, come on. I mean, we're not even back to sort of a average of the last 30, 40 years yet. I wish people would stop losing their minds. It's just overdone. People like that, you're just like, just go back and, go to sleep on top of your piles of money and just be quiet. It'll be okay.
Zoom out, we say in Bitcoin. Just zoom out a little bit and get some, have a look.
Perspective.
Yeah. So what are you
go
salty
and touch
about?
grass. So I'm salty about the hubris of Daniel Andrews. So if you don't know, Victoria is the most indebted state in the country, and the dear leader, Daniel Andrews, is blaming the Reserve Bank because the RBA told the states to go out and borrow during COVID, which is true. And now, of course, after 11 rate hikes, Victoria's interest bill alone is forecast to be over $7 billion in 2026. But what I don't remember the RBA doing is telling Andrews to shut the state down for months on end, multiple times, and destroying inner city businesses and people's livelihoods, and not to mention just an atrocious record of economic management for 9 years. But hey, Victorians are suffering from a collective case of Stockholm syndrome, so they deserve what they get. What do you think?
Yeah. He's probably worse than old Mark here, like this guy's got power and he's got actually levers here to help inflation. He could do some cuts here. Help the RBA out so they don't have to use this blunt tool called, the interest rates, He could be helping them out, doing some cuts here. But no. I just want to spend, add to the fire and blame it all on the RBA.
There's just a lot of collective stupidity around. Oh, the RBA is destroying people. It's like, look, this is what they don't get. It's like, it'll be worse if they did nothing. Because, entrenched inflation. I mean, look, we will get onto this. We might as well get onto this now. So there's the chart. Oh, look. Look where we are, I mean, no one's denying that that's a steep increase in a short period of time. But, I mean, come on. We're not even at 4% and people are losing their minds. I mean, like Phil Lowe says in his statement somewhere about, inflation's still at 7% annualized. It's like, we've been talking for a couple of months at least about we're here and inflation's here, and there's this huge, because it's like, okay, he doesn't need to hike to 7, but you got
to get somewhere near it. Yeah,
you got to get somewhere near it, and you can't let it get away. You can't let another bout. And I mean, I don't know if you read that statement, but I mean, he cited house prices are rebounding. You've got immigration flooding into the country, which we've been talking about ad nauseum for months, which is going to put pressure on all kinds of things, services, infrastructure, blah, blah, blah. I mean, is it a surprise? I mean, retail sales have been okay, it's not too bad.
Strong jobs as well, strong jobs. Like the job numbers been good as well.
I know. So, and people whinging now about cost of living, just like, you think this is bad? Wait till the shit really starts to hit the fan. You know, you ain't seen nothing yet. And I keep saying, monetary policy is a blunt instrument. They're not thinking about you at home in your individual circumstances. They're trying to lower these large aggregate measures, which are totally imperfect. And they're going to do it. And they are going to. I think actually Daniel Andrews said something sensible. He says, you don't know you've gone too far until you've gone too far. And that is true. I mean, you don't know until you really, or the other way to say it is until you raise rates until you break something, you know. That's true. But what else can you do? What else can you do? Because on the other side of it, if they weren't doing anything, they weren't raising rates, and inflation was just carrying on at 7-8%, you know, forever. You know, we'd all be.
I just hated
up in arms about that.
You know, the worst people in society get hit by inflation the most. Like, if you're on a fixed income or you're a pensioner or whatever, you know, I know it's partially CPI adjusted, but a lot of these things, if you're a low income worker, imagine going to your boss every year and saying, "Oh, can you up my wage 7%?"
Yeah,
you don't have that
when
much
you don't
power.
have any bargaining power. Yeah, you don't have it,
and so that's very nasty. So you know, the lowest people in society get hit the worst here, and that's what the RBA is trying to do. They're trying to knock this on the head, so you know we don't get this entrenched type of thinking. It's all right for the boss; he can just put out a new price list and say, "Hey, my prices are going up 7%." But the poor worker doesn't have that same power. So, just not a very nice way to run a country, I don't think. But we'll see if they get it under control.
Yeah, well, I mean, it's just there's going to be more economic pain. Sorry, that's the way it works. I mean, I saw complaints yesterday about how, the banks are going to immediately pass the rise on, but they're not going to pass it on to savers, and because that's what they always do. That's their prerogative, and you've got. You just see in times like this the jawboning that comes from governments. The more and more they want to cajole businesses into doing the things. They're quite happy to leave businesses alone when things are going all right. As soon as things start to go to the shit, you know, it's how can we blame businesses, anyone but ourselves, and try and extract more money from them. I mean, you know, a bit about Daniel Andrews before. You got to remember Victoria's the most highest taxed state in the country as well, and the most indebted. I mean that bloke is great at gaslighting his own population into thinking that it's all somebody else's fault. Moving on. Anyway, so this is just where the futures market is, and you can see that they're not actually pricing in, like, you have to go to April 24. You can see the value at 360. That's when they're pricing in the first cut. So the idea that we've been saying, which seemed a little far-fetched a while ago, that they may not even cut rates this year. That's what the market's saying right now. A lot of economic commentators were like, they'll be cutting in the second half of the year, no doubt about it. No, you know, unless there's a
crash,
massive collapse, that's not the case. You know, so it's here to stay. These higher rates are here to stay. And inflation is going to be hanging around for a while longer. So we've been right on that one. We just haven't been right on how much the stock market has internalized that, because it seemed to pretty much ignore it. I thought this was just interesting. This came from Laxman Achithan at ECRI, the Economic Cycle Research Institute, saying it's quite common for stock markets to rally at the beginning of a recession, and he notes them all there. We've had a few
huge rallies, aren't they?
They're pretty big rallies. So it's not uncommon you think, maybe the stock market's taking off, but I mean, combine that with, and I haven't got any data on that this week, but the estimates for 2023 earnings, full year S&P 500 earnings, are now flat on the previous year. Remember, they were still fairly healthy increases back last year when we were talking about it. And I always said, look, they're always always late to cut, analysts, and they're always late when the up cycle starts as well. And they've still got positive year over year earnings growth for the third and fourth quarter this year, and I think they've got to come down as well. So
Mm.
yeah, that's enough of that. So you've gone back to an old favorite, Amazon. I think maybe our private discussion offline, you may have felt you need to justify yourself now. Is that what you've done this?
Well, last week you had a bit of a go. And you said, oh, Amazon probably the one to go, and I thought, well, I've got to do a little bit of a dive in
Make your
here, and
case.
yeah,
Yeah.
put the case forward here a little bit. Because on the surface, yeah, you're 100% right, but every value guy has been destroyed by this company, like
Mm.
absolutely, absolutely destroyed. Because it's hard to understand, and because you look at the numbers on the surface, and it looks like a dog. You know, you got
Yeah.
the shares extending, growing. You know, look at the employee number. So this is the one that gets me. It's like it's
Wow.
340,016. Now it's 1.5 million. Okay,
Yeah.
but this is where you know I know we try not to do this, but trying to predict the future here. I reckon,
Automation.
yeah, yes. This is where I think this number could halve, or even
Right.
go back to that sort of number. And then you imagine what that does to the bottom line. But we'll just go through the numbers as we normally do. You look at that price to free cash flow looks okay, but then you go look at things like price to earnings, and you're like,
Yeah.
crikey, like this is out of control. Like, um, so yeah. And then you look at the return on invested capital. This is not something that I wouldn't even look at. It's like
Yeah.
two.
Yeah. Wouldn't make the screener, would it?
No. And then you look at the, gross margin 40, that's not too bad. But then you look at the operating margin, you're like, wow,
Mm.
this is
Well,
like,
it's kind of got numbers like a supermarket.
yes,
You know what I mean? Yeah. Where it's just about how much volume you can push through, and it's at fairly low margin, but fairly steady and predictable.
yep.
Yeah.
Yeah. And you can see on the bottom here, we've put the cash flow statement. So you got to look, oh, maybe it's cut off there a little bit, but yeah, you've got a little bit of cash flow coming through here, you know,
Mm.
50 billion from operating income.
Yep.
So I don't know. But then we have to go over to the next page, fly over. So it's got no dividend, and it's got enough interest coverage, but
Yeah.
this is where it gets interesting. You see here you got your liabilities. You've got how much total debt. You got
Yep.
150 billion there, pretty big
Yep.
number. But then you roll down to the income statement, and you've got under operating expenses, you've got research and development. They're spending $80 billion. 80 billion. Like that is a pretty large number to be spending on R&D.
Yeah.
And at any time, like they don't need to be doing this, but their shareholders have been conditioned to burn that much cash.
Yep.
And so if you think, we go back to the old slide, if you can get that automation, which I think is more likely in this scenario because it's more of a closed loop, like inside a warehouse. It's not like you're doing self-driving cars with a million variables that can possibly go wrong.
Yeah.
So if you could get that, that employee number down, even under a billion, under a million, I mean,
Yep.
yeah, and just the high capex just means no one. It's like Walmart. It just reminds me. I just get played over and over again. It's this Walmart again, like, or Bunnings in Australia versus Masters. Like once Bunnings had built the stores and everything, it's just super hard for someone to come in and go, oh yeah, I'm just going to outcompete you.
Yep.
Once the infrastructure's there, and then if they get some tech to lower the employee number here, wow, it's just going to be. And you notice from your Prime membership, they can just chuck an extra $10
Yep.
on, or the fees to store the stuff. So
Yeah, I can't remember. I think it might have been either like it was 59 or 69 for Prime, and now it's 79. So they put it up either 10 or $20. But even if it's only $10, that's a roughly 15% increase, just like that overnight. And I mean, I use it for my business, so I mean, it's such a small cost to pay for me, given the amount of deliveries I get. But I mean, I guess there might be some people who would quit it because they've just got it for the streaming service or something. But I mean, that's got to be. You'd reckon that'd be pretty sticky. I mean, 90% of people are going to stay with it, aren't they?
oh yeah,
At,
like
at least.
It's sort of like Costco and their membership. This is a proven model, and it just
Yeah.
blows. It just destroys other businesses. Like this is just so aggressive. It just eats into everybody. Who's running.
Mm.
It's sort of like the Walmart. Of our age, sort of thing. Like,
Yeah.
well,
Mm.
and it just engulfs everything. And once they've got the infrastructure and the warehouses and the logistics, it's not like you're going to go, oh yeah, let's go and compete against these guys, even if they've got increased their margins or whatever. You just be you couldn't go to a board and go, oh yeah, let's go do an Amazon thing right next to them. Like you'd have to be a lunatic. Like
Yeah.
this is that's the old Coca-Cola analogy that Buffett uses. Like how much money would you need to compete against these guys? Would just, and especially with rising interest rates, it might look like it's going against them, but if they get all the infrastructure and everything paid off with their free cash flow and get all this under their belt, as you can see, they can pay it off fairly easy with their free cash flow if they just stop that R&D.
Yeah.
Like, you're not going to go against these guys. Like, I just can't see anybody having the balls to do it. Like, just no one's got that amount of capital. So, yeah. So that's how I'm trying to justify it. Look at the income statement. That's the worst statement to be looking at, and try to predict what could possibly happen. I don't know if I'm stretching it a bit too much, but that's how.
Yeah, I guess. I mean, you're right. I mean, people who've poo-pooed this thing from the start. I mean, look at the returns it's given. So, the thing is, you're always sort of waiting for that day. When are they going to turn the spigot on? When are they going to turn off? Just cut down the R&D, cut down the people, and just let the profits flow through. It seems to be always off into the future because there's something else to invest in to get to that point every time. So now it might be AI or whatever it is that's going to, or automation. So I guess that's because at the end of the day, I mean, you do want to see. You want to see those numbers like return on invested capital, and I mean their return on equity is pretty good, but you want to see those numbers tick up. That you're actually getting the cash flow, whether that's in terms of dividends or just seeing the profits roll in at some point.
So I don't know if I'm gambling too much, for a mini turnaround here. It just seems to be locked in. That's all, and I don't know if it is really a turnaround. I don't know, but
well, it's not. To me, it's not like it's terribly risky or anything. It's just, if you pay, is it worth paying 50 times earnings today? I don't know. Maybe it is. Maybe you look back and go, that was a easy buy. It's about price as well. I'm not down on this as though it's a bad quality company. I just feel like there's better quality companies definitely in terms of their metrics.
Yes.
But a lot of those quality companies probably don't have the upside that this one potentially has. And that's just the trade-off you have to make, isn't it?
Yes, yeah. Trying to get the balance right there. But you have a correction. This is one of these ones that will correct pretty hard. That revenue number will get smashed if we hit a recession here. You'll see that top line revenue number just collapse as people sort of, because there's a lot of discretionary stuff on there. Like you don't buy your groceries normally on Amazon. It's more more discretionary, but we'll have to wait and see. But I'm still positive on it. I think it's not too badly priced at the moment, if you're looking at the price of free cash flow. So you look at the historical numbers there, it's basically as cheap as you're ever going to get it. So and it's because they're burning so much cash that it looks terrible. But it's like the copper miners or the iron ore miners. When do you buy them? When they look great, or do you buy them? When they look...
The thing is, you say burning cash, but I mean they are generating nearly 50 billion of free, positive operating cash flow. To be, I mean, it's not like it's not. This is not a company that's burning cash and then having to raise more money. They are at the same time they're able to be profitable while they're spending shitloads of money on R&D.
And your point is like, will investors be able to see this? Like it's You know, the beauty pageant type problem. Yes, yes.
It is a kind of a faith-based argument, because you get into a lot of these situations where people, well, they've sort of, I mean, faked it until they've made it
Mm-hmm.
this far.
Yeah.
And I always think that's a problem, like that. They've been able to do that for this long. They've been able to string people along and say, look, we're investing in this, and you can
Mm-hmm.
see the results here, and so people just get accustomed to that. But something only has to change where people go, wait a minute, this isn't worth what we're paying for it. In the same way that, waited for a long time for people to realize that about Tesla. They seem to be realizing that now,
Mm.
although I would say it's got a lot further to go down before they realize that this is just a car company, a capital intensive business with not great returns. It's not Ferrari.
Yeah.
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 So, yeah.
That's why you got to have these honest conversations, like you got to, push yourself here a little bit and,
Yeah.
some of your own biases. I don't know. That's all I'm trying. It's just Nick Sleep, it's just, this has just been the cornerstone of, those crazy returns was what I want to do. And I don't have anything in the portfolio that sort of matches what, this type of growth with underlying quality.
Nothing with that potential. Yeah. Yeah. All right. Well, what do you reckon? Are we done? There you go, folks. That's Tim making his case for Amazon. It's not a bad one. Anything else you'd like to say? Don't want to comment on Apple's result? Just came out.
Well, the iPhone numbers
increase
look
in
good.
the dividend. Yeah. Yep.
Like, that's crazy. Like, holy hell, how are people spending $1,000 on a phone still? This is
There is no recession.
just wait till next year, people. I think $1,000 phone might seem a little bit pricey, but I could be wrong. But if we do hit a recession,
crazy.
that could be another one that you could buy. People are still going to keep buying them. It's just they're going to delay that purchase, I think. So yeah, but everything else is looking good. Everyone else's numbers are great. They're all coming in looking brilliant. So hasn't hit yet. If it is going to hit, so I have to wait and see.
All right, ladies and gentlemen, there you have it. And we will catch you next time.